Why do people buy gold? What is really the bull case for gold as an investment? I would say there are 7 main points. Number 1. Negative real interest rate. 10-year treasury bonds is about 4%, while inflation is like 7%, which means that you will lose about 3% per year on your cash holding. That does not seem like much, but if we calculate how much this eats into your wealth over a period of say 10 years, compounded, that's a lot. Number 2. Quantitative easing leads to basically printing more money by governments. While most governments are currently tightening, the printing machines will be turned on again as soon as the Fed realizes that they have increased interest rates a little too much into the current market. Number 3. Debts and deficits. There is currently 30 trillion in federal government debt, and the debt to GDP ratio isn't going in the right direction either. And if you look at treasury.gov and imagine this was a company, this does not look like a road to profitability. And isn't it amazing how they plot minus going upwards like this? So it looks better, a nice uptrending graph. While the only good year where there was actually profit was this year over here, which is painted downwards. Politicians, I don't know. And then there is perhaps 120 trillion in off-balance sheet liabilities, Medicare, Social Security and so on in the US, varying a little depending on who you ask and how it's calculated. But this debt cannot be paid back based on the income from taxes in the US. So the only way of addressing this is probably printing more money and increasing the debt ceiling even further. Then again, the money becomes less worth per dollar. Number 4. Mean reversal. Today, precious metals represent about 0.5% of the overall saving matrix, while historically in the US it's been about 1.5 to 2%. In fact, in 1981 it went as far as 7%. So it could be undervalued if we believe in mean reversal for precious metals. Number 5. It's actually central banks. Here's why so many central banks are buying gold. November 2022. And if we scroll down, we have the graph over here. So this is the world's gold purchases. And the light blue is total, and the dark blue is central banks. And if you look here at the dark blue, you see that has skyrocketed. And even though this is measured in tons, so not in inflating US dollars, 2022 was the highest number of all in this graph. And to add to this, China does not export their gold. They buy it, and the gold from their gold mines they also keep, based on this article. So it seems that demand for gold is increasing. But what about number 6? Production. The past years, no significant new sources of gold have been found, and no significant discoveries have been made, and gold production has potentially dropped a little the past years, by as much as 10% in 2022 compared to the peak in 2019, now back to levels of 2015, or even lower. Also as a bonus point, which is like 6.5, it's good to understand how big this market is. What would happen if more money flows back into this industry? Is it already gigantic, or is it small, or how big is it? So the gold mining market is about 220 billion. So is that a lot? Is that a little? Well, of course, here we're comparing apples and pears a little bit. But the global equity market cap, so now it's market cap, not revenue, but still, is over 120 trillion. So for sure, there is room for a higher share of capital markets to flow into this industry if there's a case for it. It's not that it's already such a gigantic share that that's just not possible. And finally, we're at number 7, the chart. And we'll break this one down in 5 sub-steps, because if you know me, this is my favorite part. At least short term, gold has been negatively correlated with DXY, the dollar currency index. And since DXY is comparably easier to chart, we can get some clues here. If we overlay gold in orange, you can see here that as DXY reversed and went into a downward sloping channel, gold trended up. And just now when DXY reversed a little, gold has corrected on the downside. And measured in most other currencies, like gold versus euro, the uptrend is even stronger. The breakout has kind of already happened. And then the chart is even more bullish because that currency is losing its value faster than the USD at the moment. And the same is true for gold versus yen, Indian rupee, South African rand, British pound, Canadian dollars, and so on and so forth, where most have already broken out, while there is a downside reversal on the shorter time frames at this moment. Now, let's look at gold versus stocks. So here we can see that gold is valued very low to the S&P 500 index compared to historical data. In the past, this peaked at like 8. Now this ratio is below 0.5. And if we zoom in, we can see that it kind of looks like this ratio has tried to break out a couple of times, but not really gotten there. Could it be that third time's the charm for this decade? Now let's go back to the gold chart as such. Technical analysis, classical charting, and let's zoom out first so you see what is really happening. From 2001 there was this enormous run up in gold until 2012, and then this chart is close to forming a massive cup. Here you can see the cup and the handle, which if it breaks through is an enormously bullish sign, and we get target somewhere up here at over 3,000, maybe up to 4,000 if it breaks out. And if we zoom in on the more recent action, we can see that this almost broke out in 2020, but then it was immediately rejected. We just got a wick down, and then gold went into this consolidation phase. It even faked a breakdown here from this range, which I'm sure a lot of people were watching, but it was kind of a head fake to shake people out, and then it broke back into the range. So even in these gigantic markets, it's the same kind of manipulation going on as we're maybe used to from crypto or some altcoin. Looks exactly the same. And 7.5, final. The direction of the trend. And while it looks small now, you can see that this very consistent uptrend that started in October 2022 had a distinct break here last week. So maybe, if we're very lucky, even though that happened, the trend, as proxied by my new private internal testing tool, I call LarsOnline.com 0.21, I still consider the trend to be up. And then what would be ideal is to get a little bit bigger pullback here with the trend up, allowing us to load up, then a reversal, then a breakout, and then, because this isn't crypto, leverage is definitely possible here and a very sound strategy. This is not going to wick down to zero on one scam candle on the 5-minute chart. This could turn into a killer trade here. So I see this as a very healthy pullback, and we could even expect some more negative sentiment before gold will bottom out, and maybe we get some nice entries and then a total blast off. That is the main scenario I'm actually looking at here. So before we continue, taking all this into account, I think there is a major bull case on high time frames. So I think this is very exciting. There is, in my opinion, only one real argument against this. If you remember this stretch of the chart, most gold bulls, where Peter Schiff is maybe the most well-known, at least in crypto circles, they have experienced this massive run-up in gold. And some have even experienced this one in the 70s. Young people haven't. Many feel that gold is something for old people. Vitalik, who is 29 years old and undeniably smart, wrote in his end-of-year newsletter in 2020, when I guess he was 26, that one of the more underrated bull cases for cryptocurrency that I have always believed is simply the fact that gold is lame. The younger generations realize that it's lame and that 9 trillion has to go somewhere. Now, I'm also very old, and I still think Bitcoin is cool, but I'm not so sure that there isn't a bull case for gold just yet, because the digital gold revolution might take longer than many younger people expect. So as I mentioned in the video this Monday, we now have a track for commodity companies on the website. So armed with this analysis of gold as such, the underlying commodity, we can hopefully up our game one notch by going after the gold companies. And there, as I explain here, we use the regular LarsOnline V251 when applying it on the commodity companies. Since there are so many scammers right now, let me reiterate once again. You get LarsOnline for free, the real one, when you take the course and become a member. And it's on this website, ctolarson.com. Not in some Telegram group, not in Instagram DM. Don't pay someone else, don't get scammed. And this is a one-time payment for education. When you finish the course, you're a member. There is no subscription. And it's not a payment for the indicator either. You get the indicator for free, but you have to do the course. Every time I post something like this on YouTube, there are always some people who are angry in the comments. It's a small ratio, which is great because I very rarely block anyone. Just straight up scammers and people posting something dangerous or grossly misleading and won't take reason. While many other YouTubers block everyone who posts anything negative so that their feed looks very positive. Still, for those of you who are angry, in the kindest possible way, I want to offer you some insight. If you're against education and feel that other people should serve you calls of what to sell and what to buy for free on YouTube, you're actually just wrong, because I've never even met anyone who have become long-term successful that way. I'm sorry, but that's the truth. You have to roll up your sleeves and learn for yourself. That's the only way. I realize you don't like to hear it, but that doesn't make it less true. The people who join us here as a member are all taking this rather seriously. And I like that, because I take this seriously, and that means that I get to spend my time with like-minded people. That's why I'm even doing this. I'm not here to serve you buy and sell calls on a silver platter on YouTube, because that doesn't work. You need knowledge, tools, processes, and you need to be the captain of your own ship. I'm the captain of mine. We're on the same ocean, not on the same ship. Okay. End of rant. If you're already a member since before, you don't need to go in here, click get it here and pay again. You don't need to do that. This whole commodity companies initiative is an added value that you get for free. You can read more in our Discord server. And with that, it's time for Fan of the Day. Oh, Andrew. I used to recommend this channel as one of my favorite channels on YouTube, but now I recommend it solely as my favorite channel. True, open and honest. No hype, just straight up facts and the pep talk. And I really like this one, truly unique and meaningful. I really like that because I really try to do something unique that is different. Just repeating what everyone else says will be taken over by AI. There's no future in that. I have to come up with something actually new. Thank you both, really appreciate it. And then we have our most special fan with a hodl sack socks on. Tomorrow, uranium update. Thank you, tack. CTO Larsen out. Hej då.